What is up, YouTube? I'm Adam Odell, Chief Investment Strategist of moneymarkets.com, and I'm joined again this week by my research analyst, Matt Clark. And we're here for another episode of Ask Adam Anything, where you can ask me anything. You can ask me my thoughts on a specific stock, on a specific sector, on an asset class, on an investing strategy, anything that you would like. So please leave your questions and comments down below, or you can email us as well at this email address. We take questions from subscribers who pay for our premium research services, as well as we take questions from folks who read our free daily e-letter and folks like you who check out our content on YouTube. So with that, Matt, I think that you have a specific stock question this week, and I'll let you take that away.
I do, and thank you again for joining this week, and we'll get right into it because I think this is a pretty interesting topic to get into, and there's a lot of different ways that we're going to take a look at this. And we actually had a question from a Greens on Fortunes reader, and by the way, we'll put in links up top on how you can learn more about Greens on Fortunes if you're not part of that community already. We would love for you to be. We give you top-notch analysis, research, stock recommendations that are going to blow the market away, and it's all less than the price of a cup of coffee every month. So we'll put a link up top there, and you can find out more about that. But the question comes from a reader who specifically asked about Chevron, which trades on the New York Stock Exchange. The ticker is CVX. That's C as in Charlie, V as in Victor, X as in X-ray, CVX, and asked if you thought that it was a good time now to get into Chevron. Now, I'll give full disclosure here. A couple of weeks ago on moneymarkets.com, I actually recommended Chevron as a buy because of the market conditions and how things were playing out in the energy sector, and it has done very, very well. However, I do know that there are different ways to look at this, and that's what I want to kind of probe you about today and get those different takes on the stock Chevron. So with that, give me your thoughts on Chevron as a stock. What do you think of it? Is it a buy today?
Yeah, it's a great question. I'm not at all surprised that folks are writing into us right now asking us about specific oil and gas stocks. It's interesting because, last year, obviously, you know that you and I are very bullish long-term on the renewables megatrend, but for the past 18 months or so, really ever since, oil futures went negative during the 2020 pandemic, I've really been beating the drum that even traditional oil and gas stocks are going to be a great investment, even though they will be eventually replaced with or overcome by renewable energy stocks, that transition is going to take a long time. And you have to look at more than just growth rates of a mega trend or an industry or a stock. You have to also consider valuations. And the valuations of traditional oil and gas stocks were absolutely beat up in the early 2020. So unless you thought that all of the major and even smaller oil and gas operations were going to completely go out of business within a couple of months, there was really no reason not to buy some of these stocks. There was a lot of underinvestment over the past several years. Part of that, we could get into a rant on ESG, but a lot of funds have been basically not allocating to oil and gas stocks because of their impact on the environment. And I certainly support that idea, but what it's led to is an underinvestment in production of oil, and nonetheless, that's kind of come to we've seen that affect the price of oil. Even well before the Russia-Ukraine conflict. So that's a long kind of introduction, but what I'm going to also share is that I'm not surprised that folks are asking about energy sector stocks now, because year to date in 2022, the SPDR S&P Energy Sector Fund, XLE is the ticker, is up 40% year to date. And it is the only sector ETF that we track as far as the US sectors that is in positive territory. Everything else is down upwards of 10%. The worst performing sector is the consumer discretionary sector, down 17% year to date. But really, energy has been just about the only place to be this year so far. So to get to the question, is Chevron a good buy now? I'm going to have to hedge my answer because it really depends on what type of investment or trade you're looking to make on Chevron. If you're a longer term investor, someone who wants to hold well-rounded stocks over a 2 or 3 year period, you probably want to check out our green zone rating system on moneymarkets.com. So go to moneymarkets.com, click on the top right-hand box that says get stock rating, and type in the ticker symbol for Chevron, which is CVX. and you will see how it rates on the 6 factors that are known to drive market beating returns. Spoiler alert, here's the rating, 89 overall. It would even be stronger. It would probably be a 99 rated stock if it were not for the size. Okay, so basically a large company gets a low size rating. And Chevron is a $330 billion market cap company, so basically as large as it gets. And so even with that 0 score on size, the stock rates very, very well. It's a 94 on momentum. I'll show you a chart on that as to why in a moment. 87 on volatility, because we have upside volatility and better risk-adjusted returns. And then if you look at the fundamental metrics of Chevron, this is what I was talking about, where it's so undervalued in 2020 that it was crazy not to buy it. Along the way here, but basically even after this run up, I'll show you the run up, it still rates 75 out of 100 on value, and it rates 82 and 83 on quality and growth. So from a longer term perspective, I would support buying Chevron. And so basically the stock rates 89 out of 100. We think it's going to either double or triple the market's return ahead. But that said, I will offer a cautionary note that the stock has run up very sharply. It's basically made a vertical move higher over the last 3 months. So if you're looking for a shorter term, a better entry point, you might want to wait for a bit of a pullback. The stock is pretty well stretched above its 200-day moving average, and I wouldn't be surprised to see something of a pullback ahead. And let me just show you this run up, Matt. I'm going to show you a chart of CVX. You've probably seen this chart because you and I have both recommended CVX over the past several months. But as you probably know, in my Home Run Profits trading service, which is a service I've been running for 10 years now, we basically use momentum to buy stocks and ETFs that are basically poised to beat the market over a 2 to 3 month time frame. And then we buy options that expire about 6 months down the road, and we aim to hold those options for 2 to 3 months, or sometimes a little bit longer if the stock really goes on a run. But if you look at this chart of CVX, you can see that in October and November and December, the stock wasn't really doing too much. It was kind of just slowly trading up from $110 a share upwards to about $118, $117 a share. But basically, my system alerted me to a bullish breakout that was in the works, market beating momentum. And I did recommend a bullish call option trade on CVX on December 7th, when the shares were trading for about $117, $118 a share. And for about a month or so into early January, the stock didn't really go that far. We had a bit of a drawdown in the option, but then we really saw the bullish breakout take hold in January of this year. Went sideways a little bit for February, and then the stock has gone vertical in March. I'm counting about 10 or 12 up days in a row, and you can see that here. So part of my strategy is to exit after 3 months, once we've gotten the meat of a really good move. So we can see the exit signal here just about a week ago. And that's what I recommended my subscribers do. I recommended they sell those call options. We bought them for about $615 per contract, and we ended up selling them for almost $4,000. It was $3,700, I believe, was our exit price. As the case would be, the options have even increased in value since we got out of them. But as they say, bulls make money, bears make money, and pigs get slaughtered. So we try not to be too greedy. But this is a run up that is not sustainable at this pace. So it's hard to say with momentum, as specifically with a geopolitical crisis like we're in now. This thing could keep going higher, but the risk reward isn't as much in favor of a short-term buy now. So I would probably, we're not in the stock now. I would probably be a little hesitant to buy in right now with a large position. I would probably wait a little bit for a pullback or wait for another momentum signal down the road. So all in all, I do believe that Chevron is a very well-rated stock. I do think it's going to be a solid performer over the next couple of years as the energy sector kind of comes to an equilibrium. But that said, the shares have run up a lot. So we're out of our short-term trade, and I think that we got the meat of the move.
And one thing I want to point out here is there's you mentioned ESG, environmental, social, type of investing. Some people avoid getting into oil stocks because of their environmental impact. But one of the reasons that I was specifically attracted to Chevron was two things. One, it has recently entered into an agreement to purchase Renewable Energy Corp, which is a huge renewable energy company. I believe that purchase price is around $3 billion. And this is going to make Chevron a major player when it comes to renewable energy. They have also partnered with Algonquin Power and Utilities Corporation to develop some renewable power projects for electricity across their entire footprint. So what they're doing is they're now not only buying into, but they are partnering with other companies to find renewable ways to make electricity. So they're not really moving away from their traditional oil and gas, but they are augmenting what they're doing with oil and gas and realizing the strength that renewable energy has by investing billions of dollars, literally billions of dollars into making these renewable energy projects pay off down the road. And I think that was one of the main things that really drew me to it, is that I think it's more than just a typical oil and gas play. Now you have a giant who has realized the value of renewable energy and is now putting its money where its mouth is, basically, and saying, yes, we do recognize it, and now we are going to pay to make that happen. And I think that's something that we haven't seen from a lot of the other large oil and gas players as of yet. I think this is something that we're going to see more of down the road. I think we're going to see larger oil and gas players dive into renewable energy even more. And I think this is all aside from potential government policy that still has not come to fruition. These moves have all been made without that policy being put in place. So without tax credits, without any kind of investment from the federal government into renewable energy, Chevron has decided to take the step forward and say, you know what, we're not going to wait. We're going to do it anyway. And I think that's admirable. And I think it also emphasizes the value that these companies are now starting to see with renewable energy.
Absolutely. I'm glad you brought all these points up, Matt, because you're absolutely right. Market forces and the incentive of profit is really what's driving Chevron to want a piece of the renewables energy megatrend. It's not that they're being forced to. It's not that they just want to adapt with the times. And as I see it, they can have their cake and eat it too, as well as can shareholders of Chevron have their cake and eat it too. Obviously, Chevron is a profitable, cash flow positive company that is going to generate a lot of cash flow and a lot of returns for shareholders now, while oil and gas is still a big part of the energy mix. And at the same time, they're investing in the future to be part of that renewables megatrend going forward. So I think that their deal, or the purchase of Renewable Energy Group, is absolutely a telltale sign that they see this as the future. Otherwise, they wouldn't be doing it. They would just be trying to outcompete renewables, but they are absolutely investing for the future. And speaking of the renewable energy megatrend, I have put together a presentation recently on a technology I call infinite energy. And it's basically about how to tap an untapped energy resource that has not yet been able to be accessed. But with new technology coming online that's going to speed up the adoption of renewables, I think that I found a couple companies that are absolutely going to go gangbusters in that megatrend. So we'll try to link to that presentation as well. But yeah, thanks for bringing up those points, Matt. This is definitely not an either or thing with old oil and gas or renewables. It's a transition, and it will take some time. And there's opportunity along the way.
And I think one more thing to point out before we get out of that is that typically, or at least in some cases, whenever we see large acquisition potentials like this, the company being acquired will see a nice run up in its stock price, whereas the company doing the acquisition will see a bit of a drop off in its stock price just because of investor sentiment. In this instance, we did not see that. Chevron continued to move stronger because this announcement was made at the end of February. And so Chevron stock has continued to push forward. So I think to encompass everything, to kind of pull everything back and give you the takeaway here, short-term wise, I think you want to be very cautious, as Adam has said. The short-term option potential momentum may have run its course. However, if you're looking for more of a longer-term type of a play, then Chevron is definitely one worth looking at for your portfolio. So Adam, I don't know if you have anything else to add on top of that.
I think we covered it pretty well, Matt. So thank you to our subscriber who wrote in with that question. I think a lot of people can learn from that, and we'll do it again next week.
Absolutely. And again, if you do have a question, if you want us to take a look at a particular stock or sector or anything like that, then you can email us and it will go to myself, Adam, and Charles Sizemore, who's Greens on Fortunes co-editor. You can reach us. The email address is feedback@moneyandmarkets.com. We'll drop that right down below so you can check that out. Also, again, check out Greens on Fortunes, where Adam has just talked about a report that he's just put out that is a huge mega trend that has the potential to be $1 billion, even more than $1 billion industry, and it is in the very early stages now. We'll put a link up top on how you can find out more about that. Also, check out moneymarkets.com. That is your home for safe, sound, smart, simple, profitable investment information. You can set up a watch list. You can track Green Zone, or you can use our proprietary Green Zone rating system, track stock performance. You can do all that for free at moneyandmarkets.com. We definitely encourage you to do that. Sign up for our free daily e-letter. We'll send you all that great insight to your inbox every day of the week, even Saturday and Sunday, because Adam and I don't take time off. We'll send all that to you for free 7 days a week right into your email inbox. So he is Adam O'Dell. He is our chief investment strategist at Money and Markets and our founder for Green Zone Fortunes. And I am Matt Clark, research analyst for Money and Markets. Until next time, everyone, safe trading.